Hey everybody, this is Evan from TrackHSA.com. Today we're going to be talking about how to file Form 8889, the government required form for your health savings account. This session is brought to you by TrackHSA.com. It's a website I created to help you manage your health savings account. All those purchases, receipts, reimbursements, all organized online safely for free. So all your data is there. Next year when you go to file this, you'll have everything you need right there, TrackHSA.com. So what I want to do today is talk about Form 8889 and walk you through the steps to actually file this thing because it's kind of a beast. The government has not made it easy for us. We're going to review all three parts of this form and all the boxes in those parts with step-by-step instructions so we can understand what's going on. And I'm even going to show you examples of the completed forms so that you can kind of see how everything relates to each other. Now there's three main parts of this form, and the goal of it is to kind of summarize all the activity going on in your HSA for the year. So the first part is talking about contributions. What came in? Maybe you contributed, maybe your employer contributed. The second part talks about distributions that came out of your HSA. The government wants to see this number to verify proper spending. Finally, there's a third section to determine if you owe any extra taxes or penalties because we didn't conform to the law. We're going to show you how to avoid this and make sure that your return is filed properly. Let's first talk about who needs to file the form, though, before we get into it. This is anybody that during the year who, one, contributed to your HSA. Now, this includes employer contributions, but anybody that contributed has to file the form. Number two, if anybody withdrew money from their HSA, whether it's through a cash transfer, they bought something, they wrote a check against it, whatever it was, you've got to file this form to reflect that. Number three is kind of a special situation, but it's for people who over-contributed in the prior year. And this is the case where they took advantage of the last month rule and then kind of failed the testing period, so ended their health insurance and over-contributed. They're going to owe taxes and potentially a penalty on that, so they're going to have to file this form to square up. And finally, number four, if you acquired an interest in an HSA due to the death of a beneficiary, unfortunately, you have to file the form as well. What you need to file the form, basically things that you contributed, amounts you contributed. This is going to be Form 5498-SA from your HSA custodian. They'll send it to you. It shows what's coming in. If your employer contributions aren't on there, you can view your W-2 and see those there. As for distributions, your HSA custodian is going to send you Form 1099-SA to show everything that's coming out of your HSA. And finally, you're going to need the actual tax form itself. It might be in your tax filing software. And definitely Google the instructions for Form 8889. They show a lot of detail into some of these parts that get complicated. So let's dig in here and look at the first section, Part 1, HSA contributions. I've filled out some of the data in the bottom. You can see a snapshot of part of this form, and we're going to go through each of these and talk about them in detail and help you fill this out as we go. So let's get started. The first section is just selecting your plan type. What kind of coverage did you have for the year? This is generally single or family. There's going to be a different contribution limit based on your choice here. Now, if your coverage changed throughout the year, go ahead and select the one that was in effect the longest, and we'll get that number right in box 3 coming up. So just go ahead and check that, and we'll move on to box 2. This is your HSA contributions you made during the year. This is not your employer contributions, just what you made. So reference those contribution documents we were talking about a moment ago to see what actually came in. Okay, write that down in box 2, and we'll move on to box 3. This is your actual HSA contribution limit. If you had your HSA for the full year, you just have to put that single amount of $33.50 or that family amount of $66.50. Easy, over and done. However, there's a lot of times where you moved on the plan, off the plan, changed coverage, and people ask me, what is my contribution limit? So let's dig into that. You can see I've got this strange number, 1945.83 here. That's not one of those totals. So let's dig into it a bit. You can see it says all others, see the instructions for the amount to enter. I've done that, and on the next slide, I'm going to show you how I came up with this number and the situation behind it. Okay, so we are going to come back to this slide, but let's first dig into this line 3 and see how your contribution limit is actually calculated in an example. So looking at the Form 8889 instructions, you can dig into this methodology and see how your contribution limit is calculated if your coverage changed during the year. So from those instructions on the right, there's this monstrous government flow chart followed by some months with values that you populate and then divide by 12. So what's going on here is it's taking a pro rata approach to calculating your contribution limit for the year. So in each of these lines, what they want you to do is insert the amount that for a full year your contribution limit would be during that month. Add them all up to get some big number, and then divide by 12 to kind of average it out back to a year's value. So this functions best through an example, and let's see what's going on here. On the left, you can see that this story going for the year. January, let's say I had single coverage for my HSA insurance, so my yearly contribution limit is $33.50. I write that down. Same thing in February, same thing in March. But I had a change in April. Let's say I got married and had a baby. I changed my coverage to family coverage, and thus my contribution limit changes for that month. I put the yearly amount here in April, and let's say I had the same coverage in May, so I put that amount there. But in June, my HSA insurance ended. Maybe I got different insurance or employer-sponsored insurance that doesn't accept an HSA. For whatever reason, it ended. I put a big 0 there. Then I have zeros all the way down through December. So what's going to happen is I'm going to take these yearly amounts, add them all up, and then divide by 12. And when I do that, it comes out to $1945.83. That's my actual HSA contribution limit for the year, even though I only had coverage for about 5 months, and even though 3 of those were on single insurance and 2 of them were on family. So I'm going to take that back to Part 1, Line 3, and fill it in, $1945.83. So that's complicated, but it's pro rata. Go ahead and calculate yours and throw it in there. Line 4 relates to Archer MSAs, kind of an antiquated precursor to the HSA. I don't have one. I stick a big 0 there. But if you do have one, take a minute to figure out what you need to place there in line 4. And line 5 is just subtraction. So pretty simple there. I take that 1945.83 and carry it forward. Let's now look at the rest of Part 1, lines 6 through 13. Line 6 is kind of a benefit of HSAs if you and your partner both have HSAs and you're on family coverage. You can decide how that contribution limit is allocated. So maybe it's beneficial from a tax perspective if one partner takes more or less than the other. You can do that here. I don't have that, so I'm just keeping my same number. Line 7 is for an additional contribution limit if you're over 55 and you have family coverage. Check the instructions for amounts there. I don't have that. I just throw a 0 there. Line 8, pretty simple addition. I do that and move on to line 9. This is employer contributions. In this instance, I've simulated a $500 employer contribution to my HSA. I put that in line 9. You can find yours on your W-2 and put that same value here. Line 10 is terribly named. It says qualified HSA funding distributions. This is not money you've taken out of your HSA. This is for a special type of rollover from an existing IRA or Roth IRA. So they've done a terrible, confusing job here, but most people this doesn't apply to. I've simulated that and put a 0 there as well. Step 11, we add lines 9 and 10 to be 500. And step 12, we actually subtract that from line 8. And this kind of makes sense. So if 1945 was my contribution limit for the year, here we're reflecting the 500 that my employer paid towards that, reducing the remaining amount to 1445. And we'll take a look at that later on, but you can see line 13 just does a comparison here. I'm maintaining that 1445.83, and we're going to use that to verify that I didn't over-contribute in the following section. Last thing I'm going to say about this is that $1445.83 is the amount that actually transfers to your income tax return on Form 1040. This reduces your taxable income so that you pay less taxes, and that's a key mechanism for how the HSA works and saves you money. So moving on to part 2, this is all about HSA distributions, and you're also going to see how TrackHSA can help you substantiate these numbers. So 14A just asks for the total distributions that came out of your HSA account. In this case, I've simulated $1,000 came out. This can be in any method and for any reason. So if you took cash out, if you transferred cash out, if you paid with an HSA debit card, if you wrote a check against your HSA, put that number in here. Add them all up and put them in. And you'll see how TrackHSA can track all of those for you so you know what to populate here, and you can substantiate it should the government audit you. 14B is only if you rolled your HSA to another provider and had to actually receive a check to do that. They want to make sure that you received the check, took it out, and then put it back in. If you didn't put it back in, you're going to owe taxes and perhaps a penalty. So keep that in mind. Make sure that's filled out correctly. That didn't happen to me. I put 0. 14C, again, is just subtraction pretty easily. I'm still maintaining that 1,000 amount for distributions. Now, 15 is very important on this entire form, qualified medical expenses paid with HSA distributions. The government is asking you, out of the amount you took out, how much was for qualified medical expenses. It doesn't ask you to substantiate that beyond this, but if they audit you, they're going to ask. And this is where TrackHSA is a great tool to actually substantiate this data. So if I look at my TrackHSA account, I can see I've got a dentist copay, health net, a medical test, a doctor, a test. All these are different transactions I've done throughout the year for my HSA. For example, if I drill into this Warby Parker transaction, I bought a pair of glasses, I've uploaded the receipt. If the government ever comes and says, Evan, prove that you actually spent this $95 from your HSA, I can do that. I can show them the receipt. It's all well and dandy. So this is why I think TrackHSA is such a great tool to do this for you. And I can substantiate line 15, how much did I actually pay for qualified medical expenses using my HSA. Line 16 is the difference between the two. So it's comparing some subtraction to see out of the money you took out, how much of that was not used for qualified medical expenses. And that's going to be taxed and move its way onto line 1040. Line 17, there might be exceptions to this. So if you actually do have these monies not being spent for qualified medical expenses, you could be exempt from paying tax. There's a few things like if you turn 65, if you became disabled, if somebody died and you're filling out their taxes, that would lead to 17A being checked. And then 17B is where you actually get assessed this additional 20% tax on these monies. So this is going to go, again, back to line 16 and subject you to this 20% tax, which is really a penalty because then they're going to come back and hit you with tax on that amount anyway. This is also going to transfer to Form 1040. So that's distributions. Make sure you know what you're doing there. And you shouldn't have a lot going on in Part 3. And if you do, it's not good. Line 18, last month rule, badly named. What this is asking for is if you violated the terms of the last month rule from a previous tax filing, you're going to have to pay taxes and penalty on that. So previously, if you said, I'm going to take advantage of the last month rule, contribute the full amount for a year, even if I've only had HSA eligible insurance for part of the year, that was okay, but you had to do that along the terms of the testing period, which basically says maintain that insurance. If you didn't, you're going to have to put the excess amount that you were able to contribute based on the last month rule into this box, the greater than the amount that you would have been able to regularly. Check line 3 in the instructions for this calculation. Most people are going to put 0 here only if you violated this from a prior tax filing. Same with 19, HSA funding distribution. This involves the IRA or Roth IRA distribution transfer. Most people, this is 0. So on line 20, these two amounts get added up and actually counted as income. So this is going to be taxed on Form 1040, not good. Also on 21, a 10% penalty on those amounts flowing to Form 1040, not good as well. Hopefully you can avoid these. So thanks for watching the presentation. Check out TrackHSA.com and HSA Edge for more information.